using data to determine residential real estate investment opportunities. Hi, my name is Andrew.
My name is David.
And my name is Sohail.
So why would you want to invest in real estate? The main reason why you want to invest in real estate is that the median home price has vastly outperformed inflation, which means that if you put your money in a home, you can expect the value of that home to vastly outpace inflation, which means that it's better off sitting in a home and accumulating value than losing value to inflation.
So when and where should we invest in real estate? So looking on the graph on the left, we can see that summer is typically the best time to invest and sell homes. This can be seen by the sudden spikes during those months. And looking on the right, we can see that South is the largest market. It's denoted by the gray line, and we can see that it's rising. It's currently increasing right now, and it also has the largest value.
So these graphs show the predictions up to 2042. The data collected is seen in the blue line that stops at 2022, and our predictions range from 2022 all the way to 2042. The top and bottom line show the error or margin, or basically the range that these house prices can be between. And that specific middle orange line shows the predictions that our equations came up with. And this is adjusted for inflation using the 1962 currency policy. And the average and median projections are shown below. And they just show the specific price point that we predict for the next 20 years.
So what kind of home should we invest in? Looking at the orange line, which shows homes that have not been started construction, we can see that it's typically at the lower end, except for one spike. The gray line, which shows under construction homes, is typically near the top, and it usually sits at the upper half. This is definitely the best home to invest in. When looking at the yellow line, we can see that's completed construction homes, and it's typically in the middle, and it doesn't really have much value. Another reason why homes under construction are the best is because you don't have to pay to renovate the home, which can significantly lower costs, and it's much better for us.
So when should we start listing this on the market? So as you can see, the average time that it took to sell the home peaked right before the financial crisis, and then, or it peaked right after the financial crisis, and then it's steadily starting to rise once again. And this was collected at 2020, which means that in 2022 we can expect that it would take around 4 months to sell a home, which means that if we want to start selling the home by June, July, August, then it would be best to start listing it by February, March, and April.
So what is the best selling price? This graph uses color to indicate which price range has the most houses sold. Clearly, purple dominates this graph, and therefore we could conclude that purple, the 200,000 to 299,000 price range, is the thickest portion and thus the best selling price for our market specifically.
So looking at the graph on the left, we can see that the largest percentage of houses sold are sold in the southern states. And we can also see that looking at the graph on the right, we can see that the median sales price of houses sold by region, and we can see that the South, which is shown by the yellow line, is in our price range of $200K to $299,000, which means that South is best, and that our price range is best.
So how should we sell these homes? So as you can see, the total amount of home loans is steadily rising from the lows of after the financial crisis. And then in particular, the FHA, so Federal Housing Administration, loans are rising in terms of how much percentage they're taking up. And these are very popular among first-time homeowners, which indicates that the amount of first-time homeowners is actually rising. And this also reinforces why $200,000 to $300,000 is best, because it's more affordable for these first-time buyers, which is a growing market segment.
So both of these pictures reinforce the thesis that the South is the best housing market and thus the labor market. The graph on the left shows that leisure and hospitality industry is the currently growing the most and up to 2030. And the American map on the right shows where this hospitality industry lies in. Currently, it's mostly in the South. You can see Texas with 4, Georgia with 1, and Florida with another 1 as well.
So none of this really matters unless we can back this up with actual things. So what we did was, there's a company called Next Point Real Estate Finance. It's a microcap company of around $300 million. And what we did was we invested $70 over the course of around a month. And one of the worst times to buy and one of the worst bear markets in recent history. And as we can see, it's got a 12.36% return, which means that a company that primarily does financing for homes in the South is vastly outperforming the rest of the market, which means that not only does our data back up our thesis, the rest of the market shows that also backs up our thesis.
So what's our conclusion? We show that a potential investment opportunity is worth $200,000 to $999,000. It's in the southern United States. It's still under construction. It's listed in the early months from February to April, and it's being sold to a first-time buyer who works in leisure and hospitality industry.
Thank you for listening. Have a nice day.
Thank you for your time, Judge.
Thank you.